Hi guys, welcome back to the channel. So today what we're going to be doing is market outlook. As per usual, this is done on a weekly. So the things we're going to be looking at are the NAS 100, we're going to have a look at gold, and we're going to have a look at US 30. So during the week I might share a couple of scalping setups, maybe, but if you would like to keep up to date with the things we are trading, the things you are looking at, feel free to join the Telegram channel. It is in the description below. This is a free channel after all. We do have a VIP option. You're welcome to inquire. So if you guys do like this video, don't forget to remember to like and subscribe below. And without further ado, let's get moving more than average. So what we're going to do is we're going to try doing the sell side first. The reason I'm doing both sides, guys, is just that you can be ready in the event that the market doesn't go our way or doesn't follow the trend, because the market could come up, range, and drop all the way down and come chase this little 200 MA down here, right? So let's do the sell side first. Now, I'm not saying the market is going to sell, and I'm not saying the market is going to buy right now, because the market doesn't care what I think. So the best thing to do is to prepare for both ends, right? So just mark this off to the side as this misses. Okay, so what if in order for me to sell here, right, I wouldn't necessarily take a touch of this 50 MA and then sell. I mean a touch of this yellow line here and then sell. I would actually wait for the 50 to catch up. I'd wait for the market to break down. Let me just draw an extra 50 here quickly. I would wait for the market to break down through the 50 MA, right? Come retest it, then sell, right? Then I will sell it. My first target will be here, right? The reason why I wait for it to break the 50 MA, because the 50 MA, just like support and resistance lines, also act as support. The 50 MA also confirms a movement to the downside, right? Once that happens, we run it down till we, to be a little bit more conservative, I'll say 15,400. You target that, right? And then ideally, what you wait for is another break and retest of this area, and then you run into the final target. Guys, once we hit here in this vicinity, just draw a rectangle over this. Once we come into this area, I won't be selling anymore for now, unless we can break and retest the 200 MA. By the time, if the market does sell, by the time it gets down into this area, the 200 MA will be well up there, right? When the 200 MA is well up there, it means I can catch a break and retest of the 200 and finally target this area down here. Once that happens, I'm actually done selling for now, right? That would be my sell sentiment. For my buy sentiment, where my bias obviously sits more based on the trend, because I'm a trend trader, right? I would want to see a break of this area here. 1 second, let me just clear off these arrows. I would want to see a test of this area here. So hypothetically speaking, let's say the 50 MA couldn't break upward to kind of push the momentum to the top side. Hypothetically, what I would want is a test of the 50 MA first and foremost, right? So a test here, then up, then a break through this area, right? A retest here with a confirmation candle or with a bullish confirmation candle. That's my entry, right? So I would get in from somewhere here, right? So I would get in from somewhere over here. So to just give you an idea of risk to reward here, if my entry would be somewhere here, this would be my stop loss. This would be my take profit, my first one, right? With the 1:1.5. I mean, you could go even tighter. So if we scale down to like the H1 chart, we probably could get a better risk to reward here. Ideally, you'd want to do something like that, right? Remember, because this is a support area, it's a good reason to be trading there. Let me just go back to my 4-hour chart quickly, right? So there we have a 1:2 risk to reward. 1:62 risk to reward, right? That's a little bit better. However, if we can do this and hold this line, this would just be a first target to kind of kick the week off. Ideally, if we can get a break and retest and another retest in this vicinity or just above this, before we cross this line, I would actually change my target to immediately target this up here, which gives us a 5:19 risk reward. And I mean, guys, like, look at it, man, right? In an ideal world, if you are a conservative trader, what you should be doing is first this one, wait for it, close it off, right? Then you target the bigger move. Then your bigger move would be something like this. So if you're waiting for that retest, your risk reward should look something like that, right? That's a 3:28 risk reward. So you have two options. You could run it, wait for retest in the center bit here, within this vicinity, and then hold it all the way up. Or you can do exactly what I'm showing you here now. You can target this one first, or you can target that one after. This ideally, especially if you don't have a large enough account, this would be the best thing to do, in my opinion. It also depends on your risk appetite, what kind of risk management you use. As long as the target that you're targeting is feasible. You also have another option. I'm only thinking about this now. If you choose to do this one, right? What you could do is, once you break and retest somewhere there, right? And if you get like a wick upward and a H1 candle, for example, holds this line, you could move your stop to entry, just that it's a risk-free trade, right? If you're willing to do that, just remember you run the risk of actually getting stopped out at break even. Yes, you didn't lose money, but you could have locked off. At the same time, I would also recommend, if you're going to do something like this, like running it from the bottom, like we did here, right? I would recommend taking off partials then. So run the trade, leave the stop loss here, run the trade right through. Once we hit here, lock off partials. So those of you who trade larger lot sizes than 0.01, you can lock off half of your trade and you run it all the way through. Or alternatively, you can just follow the normal rules, guys. This would totally be up to you and your risk management and your trading style. This is very short term and very doable. I mean, last week a target like this took 1 day to hit that target, and within the second day we hit the target above. To give us the pip count, on the first one we have 70 pips, 60 pips, 67 pips, right? And then on the second one we have 130 pips. So that's like a total of almost 200 pips in the bag if both moves pan out. If we come for the downside move, right, your risk to reward would be something like this. Whoopsie, it's the wrong thing. Risk to reward would be this. You'd ideally want to make it above that line still. And your first one would be 1:96. That's actually pretty good if we could sell downside with the bearish divergence that you can see here. As long as this RSI is above the 50, I'm not really seeking sells at all. There's slight exaggerated divergences here as well. So this is kind of why my bias is more buy. There's that, right? And the second one, so you take that, that's your target. You enter from here, right? And the stop loss should be just above that wick, right? And there should be your target. 2:92, both brilliant. In this instance, I would definitely not recommend trying to pull something like this. That's extremely dangerous because NAS can tend to find areas of support. Remember, because it's uncharted territory, guys. There's no left to look at. Because it's uncharted territory, anything can happen in this vicinity. So you'd rather stick to the areas you know. So in this, if the sell pans out, do it one by one. The likelihood of it coming further than this area is also very slim. So just take that into consideration when you're doing this trade, right? So I'm just going to pause. You guys know, for those of you that don't know, the red is my stop losses and the green is my take profits. Same as here. So wherever you see those lines, those are basically your entry and exit points. The gray is the entry, the red is the stop loss, the green is the take profits, right? So I'll stay on there for a second so that you guys can maybe, I don't know, take a screenshot or whatever. Take your stuff. If you wanted us to reward, I'll just have it over it quickly. Yeah, for a couple of seconds. You can pause the video as well, guys. Yeah. Yeah. Everyone good? So that's what I'm looking for NASDAQ right now, right? It should be a very difficult Monday if we're ranging this hard. But we've seen Monday do some really cool things, and remember, market correction days are on a Monday. So for that reason, I'm not too hasty to be taking the trades. Those of you in our relevant channels, whether it be our VIP, whether it be our free trading channel, that's totally up to you guys. That will cover. We'll be covering the entry and exit points in a little bit more detail in the relevant groups, right? Then what I'd like to do is I'd like to go to US30. So guys, like for me, US30, my sentiments hasn't changed really since last week. We're still sitting in the same range. We saw a higher low being formed here, and then we broke structure again by a lower low and another lower low. Now we got another breaking structure. What's been happening is, and this is like where kind of using common sense comes into play, right? The 200 needs to catch up to confirm the trend, because when NAS was selling a couple of months ago, this thing was busy buying in its chops, and that led to ranging needing to thingy so that the market can kind of correct itself off of the longer time frames. So in short with this, I personally won't be seeking sells unless we break whew, unless we break this area here. So in other words, wait for break and retest of the 200 MA. Right, so let's say the 200 lifts a little bit more, right? Then I would wait for a break and a retest of that 200 MA. So we must follow through, come up. If not the 200, then the 8 and the 14 needs to come catch up with me, right? Then I'll get in, but I'll run the trade right through here down to this area. This is where I'll stop selling this thing. The reason being is we're on an overall upward trend, and if you look at the price action to the left, it's pretty smart not to be trading outside of that range. However, my bias is still buy on US30. Um, that ideally, I would like to take the sell if it does pan out. So let's look at the risk to reward there. If I get in from there, my stop loss should be just above this area. Remember, here's a little bit, here's a couple of order blocks chilling here. Yeah, there's a nice support area there, so that's good. So I can put it like just above there, plus my current support area, which is also very solid. So you can actually move it even tighter if I wanted to. Yeah, so I have more or less a good support area to give me an entry. My entry will be about here. Right, I'm gonna take profits down there. That gives me a risk to reward of 2:49, which is, geez, that's phenomenal on this pair actually. And then in terms of a pip count, what we're looking for is this. Yeah, that's about the 240 pip move. Brilliant, very brilliant trade if it does pan out. In terms of the buy sentiments, see the thing about this is now you need to take into consideration this line over here, right? This line over here is actually a pain in the side. So what we need to do is we just need to go to daily chart quickly so we can find a little bit more structure. So what I'm going to do, guys, I'm going to strike my Fibonacci from the swing low to the swing high up here. And then I'm just going to mark these areas off. As you guys can see, I'm using Fibonacci. The extensions for my targets, this is we usually do these things, right? So I'm going to do that. I'm going to remove my Fibonacci. Whoopsie. I'm going to remove my Fibonacci. Right? I just need that for targets. We're not going to use them for entry right now because the markets aren't currently moving. Right? So back to 4 hour. Okay. So there are a few options on this thing. So previously last week we were speaking of this area and the market failed miserably. That's fine. As long as we didn't take the entry, everything's fine. We didn't lose money. So what you can do is you can wait for a break in the retest of this line and run it upward till here. This, however, needs an ultra tight stop loss, right? So your risk to reward needs to look something like this. This ideally would probably be like a scalper's move, you know, very quick. 1:58. It's definitely going to be a scalp. You're not gonna run this move for long. It won't take very long to hit that line, right? That's your first one. That's your first small buy. Yeah, market kickoff, right? Then the second move, once we can break and retest this area here above here, that's where the action starts actually happening and the market's going to start trending again. So with this one, it's beautiful because your stop loss is there, take profits here, right? That is a 2:11. That's also phenomenal, guys. That move alone right? Let's first see what that other move was that we spoke of here. This move, that's already 100 pips, right? Then you have this one, that's 150, 160 plus pips, right? Then we have one more option, and this is only once the market stops ranging, right? There's another one here that we can take. There'll be a support area here. You'll notice every time, even if I pick off targets in the all-time highs, the sentiments remain the same, always. This can, however, be adjusted depending on what happens once we reach this area, right? That's a 4:94 history wood. So guys, let's do the math. Let's say we took it from here and took it step by step. And under no circumstances am I asking you guys to run this whole move in one go. Those of you who choose to do it, you do it at your own risk. I, however, am not going to do that, right? But we can work out the total amount of pips we can catch. So from here all the way up here, that's a total of 616 pips caught. That's phenomenal, guys. Like, that's what my thoughts for USDT. So the best thing here to do, I would say, wait it out. Just have some patience, because whether this move pans out or whether this move pans out, it doesn't matter. You should be ready for both sides all the time, right? So that's my sentiments here. Feel free to pause the video to kind of lock in all your numbers. I'll make it smaller so that you guys can catch all the stuff. So the light green is the target, yeah. So just that there. Maybe take notes of these. Take note of that. Take note of that. Everyone happy? Cool. So now finally we're gonna do gold, right? So gold, yo, it was a pretty rough week for us for gold. Um, we eventually at the end of the week hit the take profit, which was this area over here. Took a lot of patience, a lot of drawdown. Now guys, the one thing about gold, and I forgot to mention it in my previous video, gold is very fundamentally driven, and the reason why things are a little bit more difficult and why you get wrecked more often on gold is because it's very dependent on what happens in the USD, like, you know, anything in relation to that. So for example, like NFP actually caused a nice move to the upside, completing the whole trade. We got him from here, ran it, I stuck the range out, because I mean the conferences were all there to take the target. Now what we need to do is we need to see now what's happening on gold, right? We are waiting for a retest of some kind, right? So now gold came to this area. This is a big area of concern for me for gold in terms of taking a buy, but I also don't want to take a sell unless we break this area here. So as you can see, there's a potential, I'm not saying it is, there's a potential golden cross loading up here. So what's happening is the 50 MA is starting to converge upwards and the 200 is starting to go downward. Once that cross happens, this should be up here, yeah, and then we catch that buy up to the top side, okay. I'm going to show you guys the risk to reward shortly, yeah. Okay, so guys, like I said, I won't be taking sales if we come down to this area. I am waiting on a retest of some kind. As you can see, the market tends to drop in that area. We came up, bang, fell down, held support here, bang, shot up, broke all of it and melted through. So we're first going to do the buy side of things, right? Because the market's kind of has better structure coming up here than it did before, right? So what are our confluences here? We got a decent rejection off the 8 MA, indicating that the buy sentiment is nice. All three, my 8, 14 and 50 MA are fanning out quite nicely, which could mean that we will hold the buy bias, right? Now we go to 4 hour. The 4 hour close, nice and bearish. This for most people will seem like a bad thing. For me, I think it's a great thing. In terms of targets, right? For buy side, first I need to pull out my Fibonacci from the swing low all the way to the swing high, right? So what do we see here? We could still get bounces of 38.2, 50 and 61.8. It will wick through the 61.8 if we do get there though. So the likelihood of it going there is kind of slim. So what I do hope for is either a touch of the 38.2 or the 50. My targets, once again, will be based off my fib extension at the top, right? Fib extension up there, right? So now we move our Fibonacci away. So ideally, you're looking for a retest here somewhere, right? So I'll put a line there for the guys, right? You're looking for a retest somewhere here or somewhere here. This would be a good thing for us, guys, right? It's very nice in terms of that. So what would make us take a buy here, right? Right. So for me, I would wait for a break and a retest of this line, bang, and then up, right? Giving me a very, very, very nice tight stop loss, right? Very tight, very, very tight stop loss, right? Oops, sorry about that, guys. A 2:9, right? Could even come in tighter because of where that area is, right? So this would be my first target, right? In this case, I would actually hold it all the way up to 1851, right? However, I would close off partials on the way up here. So we're going to break it into puts because I'm trying to show you guys like the benefits of breaking a trade into one rather than being greedy and going for the whole thing, right? Especially with it being gold and especially with news, USD news that can affect it, right? So rather play it safe, guys. It's much better to play it safe, right? Then the second one we can come in from here. Let me just scroll this down. Second one we're coming from here. Once again, ultra tight stop loss, right? And we take that, right? That will be my two entries for gold, right? As you can see, I'm being very conservative in terms of what I can target because if I went to my daily chart, right? And if we can clear this area that we are in currently, the first target being valid, the second target could actually be ignored, and your other targets, should you break these, that's just 1, 2. Here's a third one for you guys, right? This third one is the big one. That's the one that I'm actually looking for. But I would, if I were to take this one up here, I would actually take it as like this. I would actually take it from this area here with something like that. That would be what my third target would be. I wouldn't necessarily say take it from the bottom here, but that would be my target based on what we know about gold. And if you can time the fundamentals properly, that's the kind of target you should be taking. However, for more conservative approach, what we do is we take it like this. Right? If we take it like this, it means we took 1, 2, 3, if not 4 trades because the market could pull down in any one of these areas and allow us to take it again, which is what happened last week. Right? Good, very overall good sort of sentiment here to kind of buy, right? Because I'm going to show you guys Dixie now. That's the last like analysis I'm going to do. I'm not going to like do it the way we're doing it here, but I'm going to cover it though, just to be careful of what to look for, right? As you can see here, there's nothing here on our RSI indicating a downside move, which is perfect, and we are above the 50 level, meaning we are still in the bullish market, right? So in terms of how this looks on a 4-hour chart, solid, we look good here, right? You see, so the buzz here is I don't want to take and get caught in all this price action. There's just too much. So in order for me to take a sell, I would only want to come here, right? If you do decide to take sells in this vicinity, know that you are running a risk of getting caught in a range, and that leads to panic closing. I do see a bounce of the 8 MA was now recently, so literally all we're waiting on is a move from the downside. The retest done and gone, and we're in. You could, in all fairness, come down all the way to the 8 again to come sort of get into the vicinity of this counter trend line here that I had here, right? To move to the top side. Should it come down past this line in this vicinity, you can actually take this buy from here, right? Depending on where we get that retrace from, and then run the same target up there. It just depends on your risk reward, how patient you can be. If you do want to get updated in terms of how and when we're going to take this trend, please feel free to follow our Telegram page. It is in the link below. finally, what I want to just show you guys is Dixie. So this is the dollar. For those of you who don't know, this is the dollar index, and it gives you the overall strength of the dollar. Right now, it is approaching a very crucial area. This is why I'm wary of what to do with gold right now. We do see a kind of a head and shoulders pattern forming here. The neckline was broken, all that jazz. That's fine. What we do want to see is a break of this area here. Of this area here. We want to see a break of that. Right? Reason being is because if it can hold that area, to try and push up again. So what we need to do is we need to be careful with gold in this time now, right? If I throw out my Fibonacci on gold, on Dixie, and I pull it down from the current move, you see, we want to come here. Once we come here, things get interesting. These are also points for reversal, guys. Look where my 27s are. Look where my 61.8 is, right? That is why I say be careful with gold now. Gold, I would say we're gonna buy. We are gonna retest and then buy. However, if we break back below this red line here, I'm not gonna take it, and I won't enter anywhere here up until we get at the very least up until we get below this block. Right? Then I'd start considering entries, thinking about possibilities of sell. For now, I won't share the analysis for the sell because I'm not necessarily seeking that sell right now. I'm actually more along the bias of buy. So if we can break through here, the bullish momentum is much stronger up here. Like I said, the trend's a lot more healthy. We retraced a lot more times. And yeah, so we just wait and see. Just for you guys, peace of mind in case it does pan out. If gold does end up selling and breaks this little rectangle here, my targets would be this here and finally the one below here. Yeah, I will, however, only take this once we take it. It's okay to take from below this rectangle here, but my target, I will only start taking them from here. Yeah. So guys, that's like my outlook for the market for this week. If you guys do like the video, please click the like and subscribe button below. And look out for next week because we'll be uploading the same things. Catch you guys on the flip. Keep it moving more than average.